Stocks with established momentum show a particular kind of behavior. They go up, after that they again set up and go up again. So it gives you an basically this is the kind of behavior which you are looking for. Stock went up, then went sideways for a couple of days, and that's where like it's had series of narrow range day. If you see, this is like an less than, this is 1.4%, this is like an uh, less than 0.69%, and this is like 0.23%, and then again it has a range expansion, and then that's in 4 or 5 days it makes 17% move. And similarly, if you see here, like it made a 17% move here, like it set up very well. Now it is setting up again, and this is a tendency of stocks. If you see like say a stock like this ABMD, which is making a big move now, so it has had this kind of, like here it set up very well, and from here to here it is up 16%. So if you can find these kind of zones where there is a orderly pullback and the stock sets up for a possible up move, then you are in a better position once the stock breaks out, and you get in much earlier basically. So anticipation works on that principle, and anticipation is more proactive. You are proactively identifying a stock which is likely to break out, and then sitting there and waiting for it to just show a little bit of sign of movement, and then get in much earlier than a breakout trader who will buy after a breakout is ready and it has shown in their scan. They'll be buying that. So this is really the approach. I do buy breakouts, and I have a very active breakout kind of a setup which I use also, but anticipation is more like in terms of you are basically in control, you're not reacting. While a breakout, you need to react. When you see something in a breakout, you have to take a decision and react. So let's look at some of the anticipation setups. Even though the market is weak, doesn't mean that look and everything is going down. That's when you get the best anticipation candidate, because when the market is and market is not going down like in the sense that it was one weekday yesterday. So when that happens, there are a lot of stocks which don't sell off. They just like sit there. They just go sideways because they have some sort of a catalyst, or the buyers of that stock continue to buy, or the sellers, those who hold the stock, don't want to sell. So basically, you have currently, as of now, I have 14 stocks in my scans, or 14 stocks which I'm watching very keenly for entry. I have SGYP, which is basically a drug biotechnology play with a recent big news and huge volume surge. If you see, like 60 million volume was traded on this particular stock on that particular day. So that's a big catalyst. Sometimes the stock spends time going sideways and then it breaks out. Then you have BCRX, which is again in the biotechnology field. If once it like and it clears this area, it's a buy. So then you have Dicom again, which is like a continuation setup. And if you see the stock, similarly catalyst, then went sideways, then breakout here, breakout, and after breakout it has already gone up around 14% now, again setting up for a possible move. RXTX, again you'll see that a big catalyst and then just gone sideways, and can go up. Benefit focus, see, if you had a catalyst here, went up, then spent sideways, and then like couple of times it had a breakout here, like a 7% move here. This was a much better move there. It went up 24%. Now again possibly setting up ahead of earnings. I think Sigma Design, see, orderly pullback. Now the trick to finding anticipation setup is to do it on stocks which have an established momentum. If you do it on stocks which are not going up at a much rapid pace, then you are not going to find much of a success with it. So this kind of a stock is going up rapidly. See, stock has doubled in the span of like 3 or 4 months, and now is going sideways. So if there is a breakout from this particular level, then the stock is capable of making a big move like it has made in previous attempts. Like if you see here to here, this is just 5-6 days, and that's a 27% move. So your objective of using method like this is to capture number of these kind of moves, and that's how swing traders think, while investors have a different view, and investment is a very different kind of approach to managing money. That's not what this method is about. This is not for investor. This is for somebody who understands swing trading and who's an active trader and who can do this. PGTI, similar kind of a thing. See, you'll see a couple of times it has gone up. And again, stock is in an established momentum. Stocks with established momentum only show this kind of behavior. If you select any random stock and say, okay, this is an anticipation setup, it doesn't work. GMO, again, same thing. G dot, recent catalyst going sideways, breakout can be good. INGN, EBC, Pinnacle Food. Now see again setting up very nicely, and that's the kind of setup which I like, where like there is a series of narrow range days, and if it breaks out, there'll be an explosive move. RRGB, similar kind of a thing. Stock is going up, say 50 to 90 in just last 6 or 7 months. So the stock has established momentum. So this is on the bullish side. You can do the same thing on the bearish side. Bearish side, I have a couple of setups which I am looking at currently on stocks which are already in a downtrend. The stock is in a downtrend. If it breaks down, or SNDK is a better example, higher price stocks is what I like. See, stock has been going down from 110, it's been cut down by 50%, and a couple of times it set up here, like say this was a setup, and from there it went down. So that's the kind of setup which you're looking for again, where like and it breaks down from that particular level. So TNet, again weak stock. See here, if it breaks down. ACTG, another weak stock. See, stock is down almost 50%, cut in half. FMI, Foundation Medicine, similarly weak stock, basically like going down for some time. Sometimes like when they go sideways like this, they can go either direction. This can break out to the upside also. AST, Asteria Bio. So while the bios are going up, this stock is weak. So this is something which I'm watching. Or TrueCar, which is like in a downtrend for quite some time. It's much more difficult to find good short candidate on short side unless the market goes into a protracted short kind of a thing, or a sector goes into a protracted short kind of a trend. So Healthways is one. Your Apple, which is like basically been weak for some time because that sector is in a negative territory. Most stocks are underperforming. AAVL, Avalanche Biotechnology, again stock is weak in a sector which is currently strong. So breakdown here can be a big breakdown. But with the biotech, you have to be careful. They can go either way. You never know. With biotech, next day morning this can gap up 100% also. So one has to be slightly careful with biotech. And as if the market turns, more short setups show up, and if the market is going up, more bullish setups show up. So this is basically one of the ways to look at a swing trading setup. There are other ways, and that's a breakout, and I do look at breakouts and I do buy breakouts also. And yesterday I had like some candidates in my shorts scan. IMAX is one which is like say first leg down, then like this counter trend rally, and then there was a down move here, or melee, similar kind of setups. These are like just starting out kind of a down moves, where like a stock made the first leg down, then there are deep buyers, they buy, and then if it breaks down again, then like it goes down. Or RTN, but the earnings is I think due in couple of days, so that's the problem there. And you had Crane and Company. Out of that, like this is the kind of setups which I like. IMAX, melee kind of setups.